if you want to see the rainbow, right, you might have to put up with the rain at some point.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Ariel, thank you so much for joining me today. Super excited to chat with you. All right, Ariel, you are the managing partner and CEO of Whale Capital. Whale Capital is a digital asset investment firm providing a disciplined, risk-controlled, and diversified exposure to public liquid tokens through algorithmic asset allocation and fundamental analysis. Previously, you spent, I think, upwards of 20 years in banking, with nearly 15 years at Citi, I think 5 years at Bank Santander. All right, Ariel, tell me about your background and your banking experience, because 20 years, that's incredible. Why would you, first tell me all about that, and then tell me about why'd you make the jump to crypto?
Well, Andrew, thanks so much for having me today. Really, I think we've been trying for a while, and so terrific to finally do this. And thank you so much for having me, because I think your podcast is top. So as you said, I probably spent. I always say too many years in banking, but I think they were fantastic years. As you mentioned, I started at Banco Santander. And I was very lucky because I was part of the mutual fund department back there, right? And pretty early on, what happened was that we spun off the business, and this is year 2000, more or less, right? And we created a new bank. I was just fresh out of college. I think I probably didn't have enough experience, right? But I had a lot of attitude in the good way, and wanted to learn. I wanted to work, and when you start in a small organization, you progress pretty quickly, right? So what decided to be something quite small. It was 7 of us. It went to be an IPO a couple of years ago, right? I had left before then, but I learned so much in the 5 years I was there. Met incredible people. That was really my start in the banking industry. I was probably 24, 25, and I was basically bringing asset managers to the platform, right? So I was lucky. I was negotiating terms with CIOs, CEOs. So I was exposed to a lot, right? And to decision-making things, right? We sold part of the bank. I was part of that in year 2002 to an Italian bank, right? And I was part of that merge. And then in 2004, obviously this is pre-Lehman, right? And this is kind of the heydays of hedge funds. We created a separate business that was about distributing hedge funds. We were a mutual fund platform. We had traditional funds, and we wanted to replicate the same for hedge funds. So met a bunch of hedge fund managers, different sizes, right? Because basically we had this distribution channel, but what we didn't have was the entire know-how, right? And that was terrific. That was a great experience, and taught me a lot. Exposed me to very talented people. I went around the world, basically meeting these people, right? And in the year 2005. Sort of a stop. I took a break. I went to business school in the US, and right after business school, I joined Citi, which, as you said, I spent almost 15 years there, and it was a fantastic experience too. First of all, being able to work in New York, I joined the corporate strategy and M&A team. So basically, back then, that team was buying banks, right? This is pre-Lehman, right? So the way you would measure banks was based on balance sheet, and Citi was just buying a lot of these banks, right? So, and with that, I went to Hong Kong. The interesting part is that the day that I joined Hong Kong, my job in Hong Kong, it was Lehman. Lehman collapsed, and we went from buying to basically selling. Citibank was almost nationalized or nationalized to that extent. So, there was a point that obviously it was clear that we were not going to be buying more businesses, but we would actually need to re-engineer, as we call it back then. So I went to work for the CEO of Citibank in Asia, and that was a fantastic experience too. It's terrific individual, and I learned a lot from him and from the people that I work with. And then went through up the ranks. I did leverage finance for a number of years, and then moved across I think it's probably one of the most profitable business that Citi has, which is the security services business. And there we were doing custody, we were doing FX, we were doing global and domestic custody. So with that, they asked me in around 2016 to move to Korea to manage the business. And it was more a turnaround story. Korea it's an incredible country, but we had some issues basically to understanding to make business over there. So they sent someone from the house and someone that would be able to translate what was happening and do the right changes. So I was there for 4 years, both personally and professionally. Probably one of the most rewarding experience that I had. Personally, my kid was born there, and professionally, I learned so much from the people, from how to really manage a business, how to manage people in a different way, in a very different setup as New York and Hong Kong, where everything is pretty much transactional, right? So I loved it. And at that point, COVID came, and with the country was closed. We were not able to travel anywhere at that point, and we had my wife and I, we wanted to be closer to home, and we basically made the decision to come back to Europe, right? We wanted to come back to Europe, and we took some time off to basically understand what we wanted to do. And when I've been at Citi, and I had always have curiosity for different things, but especially I wanted to understand financial services without having banks. And I went to fintech basically to understand different business models, and that took me pretty fast into crypto. I had been in touch with crypto before. I had been in touch with crypto in 2015. I had been part of the executive program of Singularity University. And 2015, I think crypto was at 600, more or less, right? I looked into buying it. It was way too difficult, and I didn't have enough time, and I didn't know whether it was going to go through compliance, because we needed to report everything, single trade that we do at Citi. And then the next time that I hear about it was when I was in Korea in 2019, right? And they had this thing that is called the kimchi premium. So basically, you could buy. There was a big arbitrage between exchanges, but then crypto collapsed, and then I retook it basically when I left Citi. So that's how I really got into the crypto industry.
It's amazing. Okay, so what was the thought process around leaving TradFi? Because obviously you could have stayed in TradFi, continued to keep on building, and I assume crushing it. So like, what was the thought process around leaving that world and entering crypto? And also, your colleagues, did they think? Do they think of you differently? Are they like, man, I can't believe he went into crypto? Or are they like, oh, it's a promising area?
Yeah. I think that the thinking process, like everything in life, or at least in many lives, right? People might take decisions differently, right? But I think it's a need that you have. And from our side, it was both professionally and personally. From a personal perspective, I had to spend almost 20 years abroad, right? And my parents were probably getting old, right? I wanted to be closer to them. I started to have kids. I wanted them to be closer to my parents, right? I think in my case, I applied that thinking process to many things. I want to spend time. The most important thing is for you to spend time with the people that you want to spend time with. And that's a big part of that. And then you fit sort of the rest. I knew the sort of skills that I had built, right? And I also knew that I was, back then it was in my early 40s, and I knew that I wanted to, I had a very interesting career at Citi. And I still consider myself a banker, but that doesn't tell the whole story of who I am, obviously. But what I wanted was to really try something different, something that, I was able to create and that would teach me. Banking also, at that point, was very much compressing industry, right? In terms of margins, in terms of people, in terms of it was very different from the banking that I had known 20 years ago, where it was basically creating new things. People probably got too creative many times, right? And that's why some of the things that happen. But it was very different, right? So I thought it was just the right timing and just the right time to take that time off and to be able to create something different. And that's how basically we went into crypto. The second part of the second part of the question is what people think about when you have a career in banking and then you go into crypto. I think it's much more uncertain these days. At Citibank, Arthur Hayes was there in Hong Kong actually when I was around, and there were other people. I think in Hong Kong people are quite open-minded in terms of what people are doing. Right, is quite a hub. So my colleagues from Hong Kong, the the found terrific. I think my colleagues from Korea too, because it's a country where a lot of people do crypto. Here in Europe, I think it's a bit different, but it's such a big industry these days that it's mainly mainstreams. Most of the people that I meet in crypto are ex-bankers. So it's been good. It's been good.
Was there a set of compelling data points, or I don't know, just information for you to be like, okay, crypto is actually, as you mentioned before, TradFi is kind of compressing, and there's aggregation of the top banks, the top hedge funds, the top, et cetera. Crypto's not like that at all. But so, that could have been compelling. But what other compelling data points pushed you to be like, okay, I actually should be in crypto because the opportunity is so great?
Yeah, I think to me was really I explore other things, right? But what was I wanted to take the set of skills that I had in terms of the banking discipline, the risk management discipline, and be able to use them somewhere else, right? I mean, the first thesis for us, and I mean for myself, and to that extent for the fund, it's blockchain, right? And I think I went into trying to understand blockchain and what are the potential for blockchains to change the way things are done on the internet, and I think that was very interesting to me, right? A lot of people have this moment where they say, well, the crypto has changed my life, or it's going to change everything, right? I don't think I'm that extreme in that sense. I think it's an incredible technology. That's the way I look at it, right? I think, as I mentioned at the beginning, when I started to look into crypto, I had been looking into business models that were going to disrupt banking, and I went to fintech, and then that took me to crypto. And because I genuinely thought, right, that was the opportunity there, that the opportunity was basically to disrupt and make a better banking, right? Not without having banks, but better processes, right? Probably faster, more transparent for everyone, and that's what attracted me. And then you have the philosophical point, right? The people that you actually meet in crypto are very interesting people. They have very interesting views in terms of economy, in terms of philosophy. And I think a lot of people, with the noise that crypto creates, a lot of people are missing that, right? What is this going to mean for the society? What this is going to mean for people, right? The ability to be able to do transfers with the stable coins or with other platforms. What is it going to really mean for people? And what is it going to mean for the economy, right? For monetary policy, so on and so forth.
So when you were launching Whale Capital, what was the thought process on the kind of initial strategy or kind of overall thesis? Because you mentioned before you talked to so many CIOs and other managers, with your long career, and so there's tons of different strategies you could have kind of pursued. So I guess why did you settle on the thesis or strategy that you guys are operating today?
Yeah, I think when we started, what we saw was a gap to address the institutional market. What we saw, this is 2021, right? What we saw, I mean, everything was flying at that point, right? No matter what you would invest in anything, and they would just do tenfold. But what we thought, that was nothing that we had seen, right? That had a discipline to be able to present a product to institutional investors, right? And I'm talking both from an operational point of view, which is very, very important in crypto. Everything that got to do with custody, what the counterparty risk that you have, right? On the one hand, on the other hand, basically on managing and how you manage risk, right? That's fundamentally, when you are managing people for, when you're managing assets for investors, you are a risk manager. Those are the kind of decisions that you're going to be making, right? So we thought at this point that there was an opportunity there, right? And the thesis was always, and still is, right? Blockchain is a technology, right, that has a potential to disrupt the many processes and many industries. We think is the next phase on the internet, right? And the way we understand internet, it will change few years down the line, right? So for us, the opportunities is very early on, right? We just started, right? And you might have seen many people telling you that, crypto or blockchain is what internet used to be in 2000s, in the early 2000s, when we basically, you didn't have the speed that you have, the infrastructure that you have wasn't there, right? These days, Spotify is an internet company. Then you have the .com, right? But everything is internet these days. I mean, it's just people just don't think about it, right? And we think that blockchain is going to become that, right? But it's just building the railways, is building the infrastructure, and that's the opportunity that we very early on, right? So for us, it was always about taking a long-term view. It was taking about, and also the strategy is long bias, right? Because we take views on tokens and projects, right? And but there's many cycles in crypto, right? And our fund gives monthly liquidity, and as I tell the team, we have a monthly test, right? We give monthly liquidity to our investors, to our LPs, and we basically need to know when to invest. Most of the investors that we have, some of them can close their eyes, and in 5 years, let's see what they have. Some others might have other needs, right? So we gotta give them that liquidity, and we gotta be able to give them returns, right? So in crypto, for us, what is very important to understand is when we're making that investment, right? So the investment is not the same to invest in a risk-off regime, in a token that is very nascent, than to do so in a risk-on, right? The results are going to be very, very different, right? So we take that long-term view, right? But what we try to do is to navigate through cycles too.
Understood. Okay, so I want to hear more about the investment process that you guys have built, because you sent me some information previously, and you guys have kind of this 4-stage process where it's like the stage 1 is the clustering model, stage 2 is the fundamental filter, stage 3 is the predictive momentum model, and stage 4 is the optimization model. So can you kind of walk me through what each one of these kind of different stages means?
Yeah, absolutely. So the way we think about portfolio in crypto is pretty much how you or any investor would think a portfolio in any traditional asset class, right? So what we want to do is, all right, we know that the dominance of Bitcoin is high these days. Is, I think, as of today, probably 65%, right? But that's a finished product, right? That is in 2008, and obviously has the advantage of being able to develop over the last almost 20 years, right? And there's new projects coming. So similar to what happened in the internet, we don't know which protocol is actually going to win, right? So what we want to do is have a diversified portfolio in a smart way, right? I think one of the issues that crypto has, right, is the correlation that all the assets have, and this is very similar to other asset classes, right? But I think it's more evident in crypto, right? So the first exercise that we do is a quantitative exercise where we take all the investable universe that we have, which is 500 tokens. We run a principal component analysis filter, and we start working on clusters, right? Correlation clusters, right? And we really map out how the tokens are aggregated in clusters together, right? So what we want to achieve, right, is a portfolio that has diversification across those clusters, right? And that's both a risk tool for us, right? It's basically we don't want to have over concentration in one cluster, but also help us to discover tokens that we might have not seen. And then when we analyze them, well, they might have positive or negative correlation, and we might discard them or not, right? So that's sort of first. That's the first phase on our investment process. The second one is it's in the fundamental phase, as you mentioned, right? And we look, what we do there is the research team basically, they look at every single token that we want to analyze, right? We do a quick check on, all right, what are these guys doing, right? Try to understand who's behind, what are the tokenomics, so on and so forth, right? And then if it seems that the project has legs, well, we go in much more deeper analysis, right? The things that we want to see there, it's first of all, what is the differentiation? Why is somebody building on Web3 instead of building in Web2, right? That's first and foremost, right? So what problem are they really solving? The second one, it's the team, right? Third one is their market that they addressing, and we go into tons of detail into analyzing competitors, into analyzing how much we think that particular segment is going to grow, right? We got into the tokenomics, we got into really how they're going to be making revenues, right? Because most of these projects are really startups, right? So what we're trying to understand is, great, we're going to invest in them, right? But we want to understand when are they going to start producing revenue, and how that revenue is going to be kicking back to the token holders, right? And that's, for us, is extremely important, right? What are the mechanisms that the protocol has to add value to the token holders, right? And that's the second part. We spend a lot of time doing that with basically the team, founders, and we use tons of data, right? And the third one is, as you mentioned, is what we call the risk regime, right? As I mentioned at the beginning, it's not the same to invest. If you had invested probably one of the new tokens in 2021, 2022, right? You probably would have seen anything happen for a long time, right? Or probably wouldn't be able to survive, right? If that same token, you take it to end of 2024, or probably to a bull market, right? That token could be able to develop. They would be able to get more traction, right? And that would have a positive impact on the price of the token, right? So what we determine through tons of data, on-chain data, derivatives data, micro data, is where we at with in the risk regime, right? We risk on a risk off phase, right? And depending on the regime that we actually in, we might take one strategy or the other, right? If we were risk on regime, we will position the portfolio in a more aggressive way, right? We would probably give more weight to smaller tokens that we've been monitoring for a long time, right? And that we think they're going to have a much better growth and probably more consolidated ones, right? We would deploy all the cash. We wouldn't have any cash, right? We will use derivatives for tactical trading. Whereas on risk off regimes, right, we probably were a little more conservative. We would look at protocols that are actually doing better than the rest, right? We will probably not go into small tokens, right? And what we'll do also is we will hedge ourselves using derivatives or perps, depends. Right. And Napoleon, the last one is basically to be constantly recycling this, right? Basically monitoring and rebalancing the portfolio, which is something that we do. The team has a weekly meeting, and we basically spend the whole week looking at that, right?
Amazing. Okay, so I want to go back to stage one, the clustering. So is this to identify the just to make sure that the portfolio is not correlated to each other? I know it's crypto, so a lot of things are correlated, but as least correlated as possible. Or is this more so? Maybe this is the same question almost, but is this more so to just make sure that you have a diverse portfolio in the sense of you have a crypto project that's in the AI sector, you have a crypto project that's in the consumer sector, you have a crypto project that's infrastructure, whatever. What is the kind of the ultimate purpose of the stage one, the clustering?
Yeah, we are agnostic to sectors, totally agnostic to sectors. So we don't look into sectors as in we want to have certain percentage of the portfolio on this sector and percentage of the portfolio on this other sector, right? What we it tends to happen that when we do the PCA analysis, the clustering analysis, they are together. Many of these tokens are sort of coming together, and the reason is maturity, and it's also because there are narratives that are going on, right? So they tend to cluster together. But the goal is more so on your first point, which is what we're trying to do is to have a diversified portfolio in terms of correlation. Because many times, obviously, everything goes like extremely correlated, especially when everything goes down, right? Everything's correlated. But what we try to build is that portfolio that will give us tokens, and obviously then we need to go into the fundamental piece, right? That could diversify the portfolio. So when one token is doing very well, the other one might be maturing, right? And that's going to basically perform better in a different cycle. So that's sort of the thinking process there.
On the stage two for the fundamentals, what are the kind of like the quote unquote deal killers for you in the sense of, okay, this team is great, but the token economics are totally terrible and there's zero revenue and et cetera, or vice versa, like the tokenomics are amazing but the team is terrible, or like what are these absolute no-goes for you and your team?
No-goes is that they don't have to make revenues, obviously, right? At the end of the day, that's what we're hoping to do. I think that's obviously you have some of the tokens that don't generate any revenues, and there's a lot of speculation on that, or there are other dynamics that we don't understand, right? So say mint coins is something that we know that a lot of our fellow managers, right? They're probably doing, and people are very good at it, right? But we're not traders, right? So we don't really have, and that's our investment thesis. Our investment thesis is much more based on adoption, right? So the adoption is, as mentioned, how they are going to take a big piece of the market, right? And how that's going to be able to translate it into revenues. If they are not able to generate revenues, it's very difficult for us to make a compelling story. You might have a team that is trying to figure out how actually to make revenues. They might have a great technology, right? Is they are in the right in the right segment, right? Because probably that segment is going to develop. But if they don't know how to make revenues over the course of the investment horizon that we have, it will be difficult to invest in that token for us.
How are you assessing the companies or this protocols, tokens, et cetera, from a standpoint of the market dominance? Because crypto is a funny world where there could be protocol A is dominating, let's say, like, I don't know, DEXs, like DEX trading or whatever, and then protocol B pops up out of nowhere. They have a token incentive, and the incentive's really juicy, and so suddenly the market dominance of company A just goes down drastically, and company B dominates, right? So it's like that's one of the funny thing about the crypto world is that you can kind of change incentives and change market dominance quickly based on different incentives that pop up temporarily for the most part. I don't think anything has gone on forever with these incentive programs, but how do you think about that in terms of the fundamental analysis?
Yeah, I think we try to. It's a huge part of it, right? How they are actually giving those part of the revenues back to token holders, right? And we've seen protocols. And you mentioned DEX, right? We've seen some of these projects and protocols that they have massive incentives for the token holders. The question is how long they're actually going to last for. Right? Are they going to be, if you compare a pretty consolidated DEX versus a new one, right? What is the differentiation that they're actually going to have, right? If they're is it giving incentives, how long they're going to last for, right? What's the treasury that they're going to have, right? So we try to take a long-term view on things. Long-term in crypto is probably very short term in traditional finance, right? But at least, right, our investment horizon is 18 to 24 months to be able to see those revenues, right? So if we think if that a token in your example, a DEX that's giving a lot of incentives, they're not going to be able to get any traction in the next 18 to 24 months. We might think, all right, so let's track it, right? Let's see, let's meet the team, let's keep in touch with them, and let's see how they progress, right? We don't need to be the first ones in a token, right? We're happy to be, to get into a token at a later stage, right? Because at the end of the day, what we don't want to deal with is something going to zero.
So, I talk to a lot of managers that need to talk to the teams in order to really suss out whether or not a protocol, token, et cetera, project is considered good in quality. And I know nothing beats like talking to the team directly and getting to know them, but if you could design a system that would enable, because in the traditional markets we have like 10Ks and 10Qs and things that like are, they have to report that are really, that can tell you a lot of information without having directly talk to the team. If you had to create or we're forcing everyone to follow some sort of reporting or model or whatever that would scale up the communication between these projects and these companies with managers. In your opinion, like what kind of information would be the most useful, or like what would you want them to be reporting on and doing in order for you to basically in order for the companies to scale up their communication with all these different managers instead of having these calls with different managers all the time?
Right. I think the issue that we have in crypto is that the information is not consistent at all. And I said that's an issue, but that's also the opportunity for us, right? Because you need to get into the nitty-gritty details to be able to understand where the revenues are coming from, what do they mean, right? So there's not a standardization in terms of that, right? So financials, it's very difficult to compare apples to apples, right? If say a protocol is reporting revenues, but then they're deducting incentives, right? And that happens, right? Other ones are not, right? And that's a very simple example, right? So there is a need for standardization across metrics. I think the industry is aware of that. I think both on the buy side and the sell side. I think both parts are actually addressing the question, and I think there are super interesting initiatives about this. There are initiatives around how you actually able to report the market cap, right? Because the data providers are reporting a way or another, right? The fully diluted value. What are you actually including? The fully diluted value? Are you including just the tokens that were at the onset, or are you actually including tokens that might have been given to, say, founders, or might have been given to market makers, right? So there's very interesting initiatives, and I think in the next probably 2-3 years, there's going to be a huge development in that, right? So what I like to see that is basically three things, right? Really a breakdown on how they are generating the revenue, right? What are the sources of revenue, how they use those revenues in the expense line, right? And then the governance, right? What are the governance for anybody not to be able to basically take the money and ride to the Cayman Islands, right? And that's obviously important, right? And on top of that, or along with that, is how they are providing more value to the token by, say, doing buybacks, systematic buybacks, or they're burning, right? How they do that, right? Because it's not the same to burn, right, that to repurchase tokens and provide it back to the stakeholders, right? Or people that do the staking. So I think those 4 points are the ones that I like to see in a much more detail. But I think we're making good progress on that.
Yeah, no, it's funny you mentioned that where it's like we don't have these things, and that's why there's so much opportunity. Like if we did have these great standard reporting requirements, the alpha would be compressed, right? So it's kind of like there's pros and cons. Like we want it, but not really, like not too much,
Exactly. But that's exactly the same with volatility, right? When how you deal with volatility. I mean, you want to see the returns that most of the people take it into the kind of strategies that we do want to see. You need to be able to deal with and manage volatility. So instead of being an enemy, it is right how you're going to use it in your favor, and that's what we're trying to do too.
Definitely. All right. So stage three was about the predictive momentum model is basically the risk regime. So are you looking at factors that are crypto native to figure out, are we risk on or risk off? Or are you looking at factors that are like macro, like, I don't know, M2 and like risk, interest rates, or is it kind of a combination?
Yeah. It's a combination of the three. Actually, we look at. I mean, we're very crypto native in terms of all the data. We had a big part of this analysis. It's on chain. So we slice and dice data, right, and we interpret it in a way, right, and we combine the data and we see how that data in a combined fashion is predictive, right? Because it's not so much about interpretation, right? So we have a very formal way to identify whether we are risk on, risk off regime, right? And it's the sum of many signals, right? So that have the predictive power, right? That we have identified that together, they have a predictive power, right? And that changes, right? So we always basically reviewing them, right? So that has a lot of weight, right? The second one, it's more in the derivative space, and it's all crypto, right? It's all crypto because cycles in the real economy are very different. So right now, you might see that the equity market is risk on, right? And we might be thinking that it's actually in the crypto market is risk off, right? For whatever the reason, right? Now, obviously, every single model. I mean, if the predictive models were perfect, right? I mean, we'd probably not be having this conversation. But and there's noise, obviously, right? And these models they work very well in long-term cycles, right, or medium-term cycles, what we call them, right? But in short-term cycles, what we see that there are other signals that are more predictive that have a better predictive power, right? So we obviously look at the basis. We look at the basis trades that people are doing, the inflows on DEXs or the IP. So we try to put all that together, and then on top of that, obviously, is the macro, right? But the macro is there's more interpretation of that. So what we try to do is to be able to have a system that is able to help us to make decision without an emotional component, right? There's always emotional component, right? And that can go in your favor, sometimes cannot, right? But macro is a bit more difficult to interpret in the short term. The long term, obviously, if there's more liquidity, as you mentioned, the system, that might be beneficial for crypto, right? If the interest rates go down, it might be beneficial for crypto and for risky assets, right? So we take that into consideration, but fundamentally is what we try to stick is to the model that we have, right?
So building off the stage four, which is the portfolio optimization kind of stage, what is the ideal number of positions that you're holding in your portfolio? Are we talking like 30? Are we talking 5? Are we talking 100? Like what is the ideal?
Yeah. So we've gone back and forth around the numbers, right? And I think the point I think is it's not so much about the numbers, is what they add into the portfolio and the real capability that you have to follow them, right? So we did a lot of analysis on what is the number, the optimum number of tokens, and I think we got to 24, right? But we thought that it was difficult to follow so many tokens because it's not just the tokens that you're actually investing in; it's the entire ecosystem and entire other things, right? We want to think that we have high conviction on the tokens that we have, right? And also, if you have so many tokens, right? What are you going to be doing? You're going to be doing probably allocating very small percentages to one of them, to each one of them. Yeah, they might help you to diversify it, right? But they not might be able to capture the upside, right? So right now it depends on the regime, right? I mean, in a risk-off regime, we might go down to 8, 9 tokens, right? And right now in this, that every cycle is very different, so we need to analyze. So in this risk-off cycle, what we're seeing is a lot of tokens performing well on the Ethereum ecosystem, right? So you have Aave, you have Ethereum itself, you have Uni, all these guys, right, performing very well. Dexes, because there's something about, and I think on the narrative side of the the investment, right? Which is very important also in crypto, and to that extent in traditional finance. There's a flight to quality. I think people are sort of much more, it resonates to them. All right, maybe I want to invest in a token the same way in this into a company where they're making money, right? How am I going to be able to benefit from that, right? So there's a flight to that, and Dexes or the Ethereum ecosystem has been good at building that. And there's other things that they've not been that good at, but that's something that they're very good at. Right. So in a tax in a risk off is around right now it's 8 to 10, right? In a risk on we will have something in between 12 to 15.
Would you say that now, and we're in July now, so are we in a risk on or risk off environment today?
It's a mix for us, right? Because they sort of, we were in risk off a couple of weeks ago, but the things are sort of changing. Now, the problem that you have, especially, is July, as you mentioned, right? That the liquidity is extremely thin, so anything can make it move up or down, right? So we have positioned the portfolio to be able to benefit both ways, one way or the other, right? By having probably more cash than we would probably have normally, right? So if the tokens collapse to exactly what happened last year, right in August last year with Japanese bonds, we'll be able to buy at a very interesting prices, right? If it goes up, we're actually going to be able to benefit and jump into the market again.
Very cool. All right, so what are you personally excited about in terms of the I mean, there's a lot going on within the market broadly, but is there a certain, I know you said you're sector agnostic, but is there a sector that you personally are very excited about within the crypto sphere, whether it be like AI or even meme coins you don't participate in, but like meme coins, or maybe it's DeFi, or what subsector appeals to you on a personal level, not from an investment level?
Yeah. I like DeFi and AI a lot for different reasons. I think AI is much more mature. I think is really a tool that is going to be helping people to make better financial decisions and to be able to more financial independence. A couple of days ago, we were with a very sophisticated investor, and wanted to invest in our fund, and we were telling them, how you actually use some of these lending protocols without using a bank, and these people extremely they are extremely sophisticated, but they didn't know, right? And how can they actually have an impact on the society, on certain people, and but in the US or Europe, well, we might have quite easy access to lending, but in other countries probably not, right? So that's to me it's incredible. It's incredible to see actually how the whole ecosystem is growing with things like perpetual markets, with hyper liquid in this case, and how that's going to develop, right? And that's really upping the game for traditional finance players like Robinhood or Coinbase, and that's extremely exciting, right? Even with stable coins, and I know that's something that it's kind of becoming a cliche at this point because everybody's talking about stable coins. But looking into banks basically launching their own stable coins or tokenized deposits is fantastic. It's incredible, right? AI, I'm very interested for other reasons. I think it's very nascent, right? But the things that you're actually going to be able to do, especially on many things, but I'm very interested on the privacy that they're going to be able to offer. It's incredible. I think it's incredible, and how it's going to help you or could potentially help people to keep and to fact check some of the things, right? And that it got to do a lot with how you actually think the society is going to progress, right? Where the society is going to go, right? I mean, if you think about our kids, right? Maybe they're not going to know what's truth or what is not truth, right? What are the tools that they're actually going to have, right? So you asked me more about my personal interest, and I think that's very close to me.
Yeah, we're talking about this, what cryptos has changed and what it's going to change, and the technological advancements. Like building off that, I'm thinking about, you're a fund that is liquid, and LPs, first of all, they're not used to the volatility of crypto, like broadly speaking, unless you're a crypto native, which there are a few. And then on top of that, you know, like what are the in general holding periods for these different your different assets in your portfolio? Because you're saying, hey, we're making a long-term bet. The LPs agree with that and they're on board. But then when it gets crazy, maybe they're like, hey, I know, you're saying it's long-term and we're long bias, whatever, but I'm freaked out. I want to pull out my funds. So like, first of all, I guess, are there like gating mechanisms where you can say, hey, listen, like you have to be in the fund for a while to understand kind of the long-term potential here. And then secondarily, does that translate into or how does that translate into the holding periods or the average holding period for you?
The There are gating mechanisms, right, to be able to protect the rest of the LPs, right, and that's the goal of these gating tools that we have. We never apply them. We we only have had one redemption from our fund in the last 2 years and a half. Yeah, and I think part of that is because when people commit to an investment like this, they sort of understand. We spend, I mean, the selling cycle, it's long because obviously a lot of people don't know. A lot of people want to do a lot of due diligence for all the right reasons, obviously. But I think once they are in the fund, they understand what the industry is about, right? And then we make a big effort to be able to communicate with them on how we position the fund, right? So they actually understand where the thinking process that we have in terms of the risk regime, in terms of the tokens, in terms of some of the narratives. What do we get into this? What we get into that, right? So I would say, as one of my partners says, everybody thinks it's long term until they're not long term investors anymore, right? And that's, I think, is true. But I think we've been lacking it in that sense, that our LPs are pretty aligned with the view that we have.
Yeah, I think that's incredible. I think finding the right LPs that understand your strategy, understand what you guys are gearing towards and have built your firm towards is super important. Just because from my history and having conversations with folks and personal experience and whatnot, when they can say, hey, we're fully aligned, we believe in crypto because like you've convinced us and whatever, but when things get volatile, they get, it's like, it's, for them, a volatile period is like a 5%, 10%, right? So in crypto, they're like, oh my gosh, this is insane. Like I can't handle this, right? So for you to have found the LPs that are willing to take that bet and willing to be there long term is just so important. So how are you able to communicate that to them during the pitch and the general sales cycle? Are you just saying like, are you just reinforcing again and again, hey, this is early stage technology, we're in this for the long term, or is that like, how are you able to?
Yeah, I think what we're trying to express is everything in simple terms, going back to first principles always, and be able to remove all the sometimes negativity around crypto, right? But really educating people on, all right, this is what crypto is, right? I mean, you have what part of the crypto industry that are probably might have bad press, but the view that we have is much more on the technology, which is blockchain, right? And be able to basically explain them and very rationally how the internet has progressed. When it started in the 60s, how it went to the commercial phase in the 90s, right? What happened in that moment in time, what it has become, right? And what is really lacking at this point, right? So our investment is not speculative. It's much more about the technology, right? And I think people that resonate very well to people, right? And then we always compare this. What is the volatility? Why why these tokens have so much liquidity, sorry, volatility? And we always sort of give the same example, right? If you had taken one of the top any top technology company these days, right? You take Facebook, you take Google, you take any of them, right? So say we take Facebook. So we take Facebook in 2004, right? The social media segment wasn't even a thing, right? 2004, people didn't have iPhones. There wasn't anything. I mean, people would communicate each other by emails and calls, right? Really, that was what it was. And people were not thinking about tagging people. They were not thinking about, writing the news or sharing ideas. That was alien to most of us, right? But so the industry hadn't been created. That first of all. The second part is that if you had giving liquidity to Meta, right, to Facebook, in 2004, right, in that very year, right, you might have had, the twins get into a fight with Zuckerberg, then Sean Barker doing something that was probably not great for the image, right? So, and that would have a massive impact on the price. If that token, or sorry, if that company would have been trading, right, you would have seen exactly the same volatility, right? 20 years later, right? That's one of the largest companies in the world, right? Same happens with Amazon, same happens with all of them, right? So it's that liquidity aspect that gives you the volatility, right? But if you want to see the rainbow, right, you might have to put up with the rain at some point.
So in terms of, as we're having this conversation, I'm thinking about, risk management, because you mentioned that you guys do some hedging, but I also comes to mind, I'm almost like, if you have the LPs that understand, and this is a long-term thing, and they understand the volatility, it's like, why even hedge? Just go fully long. Say, hey guys, like this is a quasi venture play over the course of many years. You're just gonna have to deal with the volatility, because like by hedging, aren't you kind of minimizing returns just to make LPs feel a little bit better? Or am I thinking about that incorrectly?
I think we are minimizing returns to a certain degree, right? But where you win in crypto is on the drawdowns, right? If you're able to cap the drawdowns, right, your growth basis is much higher. So yeah, so if there was a large drawdown, 50%, which is not unusual in crypto, 40, 50%, right? And we're able to cap it at 20% and be able to grow from there, right? We would have 30% difference from the bottom to where we actually started to invest again, right? So it's not so much about not. I think it's compatible to be able to have the long-term view with managing the risk at different phases on the journey.
Right. So it's a little bit of a, I guess if you're comparing it to other crypto funds or other funds, I mean, there's a whole like plethora of different strategies, but you're not the venture token pickers where you're going fully long and without any hedging. You're also not the quants that are kind of doing market neutral stuff and fully hedged and whatever. You're kind of doing this a little bit of a mixture to ideally optimize the returns and the protection. Is that kind of the best way to describe it?
I think that's very fair way to describe it.
And when you're investing in, you mentioned previously the number of tokens in your portfolio varies. Sometimes in risk on, it's more; risk off, it's less. Do you ever have issues of liquidity of the actual tokens themselves, or are the tokens you're trading and the size you're trading like a non-issue? You're like, oh, we're totally fine with XYZ token, even though it's it's number 24 out of the 24 that we have. There's no issues.
Yeah, no, we actually have liquidity issues, right? And it's going to depend on the size of the token. Obviously, most of the tokens that we have are in the top 100, right? And the farther down you go, the more liquidity issues that you're going to have, because the liquidity is fragmented across different centralized exchanges or decentralized exchanges, right? And you sort of careful with not getting into just taking all your position at once, because that's going to have a negative impact on the price, right? I think for those tokens, we have a different view, and we approached them in a way that is probably more venture capital. So we invest a small percentage, right, with the hope that that's going to give us a 40x in a certain period of time, probably longer than we usually would take a view, right? But what's important for us is to be able to have the right metrics to see progress on how those guys are actually developing the token, right, and the project itself. So we tend not to. It's a small percentage of the portfolio that even if it was going to go illiquid, it would not have a negative impact on the investors if they decided to come and wanted to redeem all of them their investments at the same time, right? But the view is I mean, the problem exists, and as mentioned, is mainly on small tokens. On the rest, there are sort of medium, large caps, and the liquidity tends to be there, right? And we have many venues where we trade, right? So we would be able to exit some of them at the right time.
So not to give away any sort of alpha here, but are there any areas now that you're looking at that you believe are, or you or your team believe are underpriced that you guys are really excited about? I know you're sector agnostic as well, but just anything within the crypto realm that you guys are really excited about?
We're excited about a lot of things, actually. We're excited about, as mentioned, some of the ecosystems that are being built. I think when we look at in this technology, what we're trying to find is always network effects, right? So because they cross-polarize each other. So if you have an ecosystem where you have a DEX and then you have a lending protocol and then you have a decentralized protocol, right? And so all these things at some point they cross-polarize each other, right? In terms of liquidity, we see some of those big ecosystems lacking. And for us, Lagging is a real opportunity to be able to have those projects that might exist in other in other protocols, right? So, I mean, without giving too many names, right? If we might see again Ethereum that is a fairly developed, right, and mature ecosystem, right? Things are working there very well, right? But we might see another layer one that is kind of going in the same direction, but might not be able to have, a lending protocol. We might not be able to have a proper decentralized that is not pumping memes, right? So that's where we actually try to go and invest and to dig in and why it's not happening, right? And that's where we actually create most of the discovery token process that we do.
Do you have a view on the 4-year cycle? Because previously people said the 4-year cycle was due to the halvening, the Bitcoin halvening, and the amount being produced is reducing, and so that caused excitement. Other people say, oh no, that's always been tied to global liquidity. So it's almost kind of been like that's not even correct. But yes, there is a 4-year cycle. Now some people are saying the 4-year cycle is over, and the amount of Bitcoin being halved is like not really that much. So who cares? But what's really impactful is kind of M2 and total money supply. So, like, do you have a view on this 4-year cycle and this kind of argument that it's still here or it's not here?
Yeah, I think this cycle is very different from past ones. And I think you get into the nitty-gritty details of each one of the cycles. It's always been different. They're always been different, right? I mean, the first cycle it was obviously just Bitcoin, and then you started to see the coins coming and then different macroeconomic factors that might have helped the particular cycle to go up or to go down, right? So in 2021, obviously, there was a bunch of money that the governments had given away, right? And people were sitting in their house and they were basically started to trade crypto. That obviously helped to pump the price, right? Then when that disappeared and then the economy actually went into a recession, obviously had an impact on crypto, right? And a lot of people started not to believe in crypto. I think there's many factors that are probably going to make this cycle a bit different, right? First of all, a lot of Bitcoin is going to be an institutional asset class, right? That you have endowments, you have pension funds, you have big family offices to invest in it in a very simple fashion by the spot ETF, and that has drawn a lot of the liquidity to that particular asset class, right? And has taken it away from probably other tokens, right? Also, I think from if you think about traditional finance and crypto in silos, right? I think once you invest into one of these tokens, right, and you're going to have exposures to crypto, right? A lot of people might think, all right, so the money is basically locked in that pot, right? So if you're already on ETF, you might not going to go into a native crypto market, right? So that might actually reduce the what or might not fulfill what we actually saw in past cycles when people say, all right, so Bitcoin is already at the top of the price, and now we're starting investing in other things that are going to give me more price, right? I think you also have a lot of companies investing into crypto. I think as of yesterday was 121 DATs, digital asset treasuries, right? And that people are going, many people see this as a proxy to crypto, right? So I think this cycle might indeed be different, right? And time will tell, right? I don't think any serious investor might think that the past is going to guarantee what is going to happen, right? So we don't manage the fund in that way, right? We're not waiting for the alt season to happen to be able to see the returns, right? So, and I think also this cycle is going to be very much focused on quality, very much focused on quality. What you have is actually a barbell effect. You have a lot of the quality tokens that are giving revenues that they have the right mindset in terms of how we're going to create more revenue, how we're going to be able to transfer this to token holders, and then you have the other ones, which is basically much more on the tokens, on the memes, which for us is more like a casino, maybe because we don't understand it, right? But I think that part and anything in the middle is kind of going nowhere at this point. Will that still happen? We don't know, right? But that's what we manage. That's the added value that any fund should give.
Yeah. What do you think about these ETFs? I feel like we're heading towards a world where there's going to be almost, for the top, we'll call it 50 coins, there could be an ETF for those different coins. And what does that mean for, I guess, the space broadly? Is that, and also you mentioned like this is a different cycle. This is almost like the institutional cycle. Like we've been calling for so long. Like they're coming. Yes, they're coming, but they're bringing their own institutional products like an ETF or a the treasury companies, their own ways of going about it versus like buying the tokens directly.
Yeah. I think that will happen, right? And I think it will happen soon, right? I think especially in the US with the changes that in the SEC and the views that they're actually having on crypto. That would definitely change, and I think it's going to be much faster to be able to have ETFs. And I also agree with you that they're probably going to be 10, 20 big tokens that are going to go into ETF. And why would anybody hassle to go into by themselves, do self custody if they can actually buy it through their brokerage account, right? But I think that's an opportunity for. For managers because it's really going to force managers to be able to create alpha, right? If you don't create alpha, why would anybody invest with you if you're able to get the same product for 25, 50 basis points, right? So it will create, it would be people that will not survive, right? Or there might be a consolidation in the industry, right? But it will going to create a much stronger industry from my point of view.
Yeah. Also, what do you think about the IPOs in crypto? Because I feel like, the IPO market in the States has been super lackluster the past, I don't know, we'll call it 3-4 years. And finally, we're seeing IPOs and we're seeing crypto IPOs, which is like, even more amazing. But yeah, what are you thinking about these IPOs? Because it's funny, in crypto, I feel like the talk of the town is, hey, fundamentals, revenue, et cetera, et cetera. And then you see Circle go public and like they're trading at some insane multiple. So what are your thoughts on these crypto IPOs?
No, the thing well, I think it's great for the industry, first of all, because I think for it somehow it gives confirmation that it's an asset class, right? That is going more mainstream. I mean, as you mentioned, we saw Circle, right? And most of the questions that we actually get from our investors is, what is the use of this technology, right? And when you have a company like Circle basically going IPO and doing very well in that IPO, it's sort of a confirmation. We'll see whether it's going to be able to trade at those comparables, right? As Kraken is probably going to be exactly the same, and a few other ones, right? And I think it's an opportunity, obviously, for the companies, and it's a whole opportunity to be able to create a much better ecosystem for crypto, right? I mean, if you think that you're going to have better protections in terms of regulations for, say, exchanges, right? They're probably going to be more people, right? And someone like Kraken might give visibility, right, to the industry. More people are going to go and get into the industry, right? And I think people have learned also. I think people, from especially from the previous cycle, right? People were pretty much into, I want to just speculate, right? And I think people are much more about, all right, I want to understand what this protocol is doing and make better investment decisions.
All right, going back to Whale Capital, what is the grand 10-year vision for Whale Capital? Where do you guys want to be in 10 years from now?
Yeah, I think first of all, we want to be able to keep creating alpha for our LPs, right? I think it's going to be us, instead of having one product, it's probably going to be a few other products, right? I don't think there's going to be a bunch of them, but we're probably going to have a few more of them to be able to address different needs, right? I mean, people that might want to have less volatility, people that might want to have take a longer term view, but probably I would anticipate 2 or 3 more funds for different investment needs, right? And hopefully being able to be an influential partner in the ecosystem, right? To be able to both help LPs and to be able to help new people that want to come in the industry, both investors and developers and people that are creating companies.
Amazing. All right, Ariel, it's time for the closing questions.
Fantastic.
You're going to hate this one. All right, so you have to, this is personally,
Okay.
not through the fund, personally. You have to buy and hold one cryptocurrency for 3 years. It cannot be Bitcoin. What would, like, which cryptocurrency would you choose?
Solana.
Solana. Okay, tell me more.
I think Solana is probably going to be one of the winners in terms of the ecosystem that they're actually creating. I think they still have a lot of issues with their math. I think they have a lot of issues they become better in terms of being reliable, right? Not having not having the uptime, probably improving on that, although they improve a lot, right? And I think the community in Solana, they were able to take it from 6 to 250, right? And I think the community is still there, right? But is that sort of pockets of applications that have not been developed in the ecosystem that makes me be very, very positive about it, right? I mean, if you look at Solana these days, it's a lot about memes, right? Which is sort of not what we do, right? But at the end of the day, for us, that's an explaining and validation of what Solana is actually trying to do, which is putting speed, right? Being able to be reliable, right? And the amount of memes that actually trade, they're huge, right? And they have not been any crash, or they very few crashes, right? So I think I'm fairly positive about Solana, and I say Solana because it's one of the big ones, right? But the smaller ones I would also have a look at, right? On the AI space, Tau, for instance.
Oh, tell me more about Tau.
BitTensor, it's really, the way we look at it is much more about also an ecosystem, right? Where people are creating subnets that are addressing different issues, right? And I think, you don't necessarily need to build something AI related, but most of them are AI related. I think there's a big emphasis on why are you doing some subnet calling in Web3 if you could be doing it in Web2, right? There's a lot of emphasis on security. There's a lot of emphasis on how you actually going to be able to monetize this, right? So from a when we're talking about how we invest and how we think about projects, right? From a revenue perspective, I think many of these subnets are fantastic, right? The fact that are going to be in an ecosystem is sort of cross-pollinize ideas, cross-pollinize resources is great too, right? The community, which is something very important in crypto, it's great. The people that are actually developing there are extremely smart. The founders are extremely smart too. So we very much we very much like it, right? It might not be for everyone. It might be for a different depending on the risk appetite that you have. We would invest in a probably risk on phase, right? But I think over the long term, right, it's going to be one of the winners.
Love that. All right, what makes you pessimistic about the future of crypto, and what makes you optimistic?
I think I'm much more of a full glass kind of guy, right? So I think a lot of things make me to be really positive about the industry. Regulation, right? First of all, I think the more regulated the industry is, then the more comfort is going to get investors, right? and more educated decisions they're going to be able to make, right? Also, the talent that is actually flowing from different industries on the development side, right? The people that are developing in these blockchains are incredible, right? In on more on the investment side, or even on the infrastructure point of view, right? A lot of people coming from banking, finance, or even engineers, right? That are in the industry. So there's actually a lot of talent, right? So I'm 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 very positive on how things are actually developing. Would I want them to be faster? Obviously, everybody would want that, right? But I think things take time, right? And you've been able to do, or crypto has been able to do something in 15 years that it took probably 60, 70 years to traditional finance to achieve, right? So I'm extremely positive about that too.
Love it. Okay, so throughout your journey in TradFi and crypto, what's been the most valuable lesson that you've learned across your kind of business career?
Just be able to show up, right? Just be there day in, day out. Read, right? Having a long-term perspective on things. And I see that on young people, right? I see that, some of the interests that we have here, some of the people that collaborate with us, um, that it is, and I'm probably older than I'm much older than many of these guys, right? But just being able to sacrifice things short term to be able to acquire the interest in the long term is something that it's very valuable, right? And it's not just valuable in terms of work; it's very valuable in terms of the relationships, right? I think if people understand in your career, or people shouldn't understand their careers just in terms of, all right, what am I doing, right? It's just what are the relationships that you're going to be able to build, both from a personal point of view, because you want to enjoy the journey, but also because those people are going to be able to help you, right, in the future. I think that's crucial, I would say.
Love that. All right, last question. What piece of content, whether it be a book, a TV show, podcast, movie, etc., had a really big impact on your life?
Um, I mean, books. I like to consume a lot of information, right? I think there's so many ways these days that facilitate you to do so. Although there's not much more, there's not a lot of time to do it. I think different formats help you to do that. Podcasts like yourselves, right, which is super educative, right? When I go on, when I'm commuting in the morning, you're just able to learn from other people that in other parts of the world that would not have access to, right? It's not that I go to the US every single day, but I'm able to listen to what's happening over there every single day, right? I say the US, I say Asia, I say many other parts, right? In terms of books, I think books give you that long-term view that we were talking about, right? I mean, if you've been able to, a book has been able to survive over the years, it's probably because it has strong lessons. On the fiction side, I read many times Siddhartha from Herman Hesse. I think it's part of the journey, right? I mean, how you start being something, and then you throughout the journey you change and you move, and then but what's important is the essence, right, of who you are, right? And no matter what's happening in the outside world, basically you still be the same person. You should try to be the same person. Obviously, a lot of things changes, but the essence is there, right? More from an investment point of view, it's a lot about risk management and be able to see things in a different way. I love Nassim Taleb. I mean, he might not be the nicest guy out there. I've never met him personally, right? But it seems that he's a tough. He's a tough cookie. But what he says is it's extremely it's extremely valuable, right? Because and if you're thinking about full by randomness, right? That I've read a few times. Yeah, many of us are right on daily basis, right? I mean, this cause effect, right? We might think there is a cause effect paradigm there, and it might not be, right? And that for as an investor, as a risk manager, which is at the end of the day what we are, right, is extremely valuable, right? So always try to get back to that, right? And then you have you have movies, right? And in terms of movies, it's always something that, but there's also some lessons to be learned there, right? Love, I mean, I like the old movies. I love the Godfather. I think it's incredible, with the importance of family, the importance of relationships, as we were talking about, right? And how, people, being able to survive throughout different generations, right? Doing business, well, that might not be legit, right? And not enough. I'm not pushing for that, but it's the codes that people have, right? That perdure over time, and that's one of the things that I like the most.
Amazing. Amazing. Ariel, thank you so much. This has been incredible. Where can people learn more about yourself and learn more about Whale Capital?
Yeah, we are on myself. I'm on LinkedIn, right? And you can probably tag my name, and it is going to be there. Same for Whale Capital. We publish on our website. We publish our blog. We're not very active on X or Twitter, as a collective state. It's probably something that we should do. But we use LinkedIn as a professional way to convey our views on the industry.
Amazing. Thank you, sir.
Thank you so much, Andrew. Appreciate it.